Let's start in Nigeria, where the central bank has announced a more flexible foreign currency policy. Last month, the institution said it would move away from the peg that it has had for a long time now, pegging the naira to the dollar, but it had not provided any details at that time. Today, however, the bank's governor, Godwin Emefiele, unveiled the new policies at a news conference. On Monday, President Muhammadu Buhari gave the move a thumbs up, saying that it would improve the business environment. A decline in oil prices has essentially dried up oil revenues on the official channels, knocking down the naira in the parallel market.
A raft of reforms on forex policy from Nigeria's central bank governor, Godwin Emefiele. After a significant dip in inflows in foreign currency, the governor says the country now has sufficient forex reserves to sustain economic activity.
The Central Bank of Nigeria today has foreign reserve of close to about $26.5, $26.7 billion. This is certainly substantially higher than the level of any pent-up demand that is in the market, right? So the market, and we are making efforts to improve on the supply of foreign exchange in the market. We are also optimistic that the steps that we have taken today will help to further deepen the market.
The naira is currently pegged at 200 to the dollar, although parallel market forces saw the naira trade at 345. The central bank says the introduction of primary forex dealers will allow the market to have access to liquidity and function normally.
There we will have non-primary dealers and primary dealers. The guidelines for the operation of or qualification for being a foreign exchange primary dealer will be on our website.
Although analysts say past policy missteps by the central bank have slowed progress to economic growth.
The central bank and the government now, therefore, they have found themselves in a situation where they have to defend the naira. They feel the naira need to be defended. But at the same time, also the market forces, which should naturally determine what the price of a currency should be, the forces of demand and supply, has to play. So on the whole of this, we agree that you cannot enhance the value of the naira without enhancing our capacity to export, expand the manufacturing base, and diversify the economy.
Experts say private sector investor confidence is also likely to improve.
Nigeria's central bank has had to make deliberate adjustments to foreign exchange policies in order to jumpstart a struggling economy and improve terms of trade. Analysts say newly introduced frameworks provide more access to liquidity to ease current demand pressures. Sophia Dengo, CCTV, Abuja, Nigeria.
Let's get your reactions to exactly what that policy is, or rather that policy announcement earlier in the day. Deji Badmus is live in Lagos right now. He's got more data on this story. Deji, walk us through the reactions you're getting to this announcement. Was it what most market actors were expecting?
Well, substantially, yes, Rama. The reactions have been very positive. Investors and, of course, the business community has been hailing this as a very positive and bold step. But, of course, not everyone is happy, to be candid. Local manufacturers are not happy that those 41 items, the CBN stopped from accessing Forex on the official window now. The CBN says they will continue to remain barred from accessing Forex through the official window. Local manufacturers are actually calling for a review of that, and they are saying it doesn't help them at all. So they want to see a change. They want to see some kind of change. And then you talk about exporters. Of course, exporters are happy that now they would have unfettered access to their export proceeds, and that, they'll be able to sell at the market-driven rate. That's the interbank rate that will be seen going forward, beginning from Monday, the 20th of June, Rama.
Indeed, but given how stubbornly the CBN had clung to this peg, this is a topic we've talked about so many times over the last year. There's some who didn't expect to shift immediately to a fully floating regime. Why did the CBN go for this option instead of, say, a gradual devaluation that leads to the floating of the naira?
Well, if you ask me, it's simple. We all knew this was going to happen. Just a couple of days ago, maybe 2 days ago, the president himself actually, wrote an article on an international newspaper now where he supported and backed the flexible exchange rate policy. But fact is that Nigeria, the old policy, let me refer to that policy now as the old policy, had become unsustainable. The price of oil has, as we know, has still not picked up as fast as we would expect. As a matter of fact, it's still going down. So Nigeria hasn't got the money. It hasn't got the funds at all to continue to sustain that old regime. So at some point, everybody knew that the CBN was going to give in. Of course, a lot of people had said the CBN was actually looking at the body language of the government, even though the CBN has maintained that it has operational independence. There's no question at all that it also has, it has some kind of, the political leadership has some kind of oversight over it. So, well, the good thing is that eventually the CBN, Nigeria has decided to bite the bullet, and it has adopted this policy. But let me just quickly say this, Rama, that actually we can't say this is completely a floating system, if you like. We can say this is, we can describe this as semi-float, because don't forget that the CBN still retains what it calls a special window now for critical transaction, and the exchange rate now for that window will be 199. That's what it said the last time, and of course the CBN governor says that window will still remain. Indeed.
One last question for you, Deji. Now that the CBN has essentially bit the bullet, so to speak. Right then, I understand we've lost that connection with Deji Badmus live in Lagos. Apologies for that. Fascinating discussion all the same, and it's certainly one of the biggest stories that we're having right now across sub-Saharan Africa.